We've been talking about this A-share market and just the volatility we've seen is down 8% in 2 weeks now. We're just a whisper away from a bear market territory. And it seems like the cat's already out of the bag that we potentially could see a triple R cut. I guess that's what the Chinese officials were signaling. We didn't quite get that yesterday, but now that we're below some of these key levels, does this just spark further selling to you?
Yeah, I would caution against, using the monetary policy to sort of support the stock market. We have seen that movie before in 2015, and that didn't work out well for the market back then. And also in April, we had one triple R cut, and that was quite a surprise to many people. And ever since then, the market was substantially lower, as you pointed out just now. So, I would say that even if a triple R cut is coming, and, the problem is that market is expecting this. Many market participants, including myself, have been looking for a triple R, at least one more triple R cut in the second half of the year. And with the situation rapidly deteriorating, we wouldn't be surprised to see more than one triple R cut. But the point is that the market is rapidly pricing it in, and at the same time, when you're cutting triple R. Point number one is that it may not necessarily immediately become bank lending. The banks can choose not to lend out the excess reserve that it has just been released. And secondly, when you're cutting triple R, it also means that the central bank's balance sheet is actually reducing in size. So what that means is that the central bank is actually stopped taking over risk from commercial banks. So those are the things that we need to watch out for. So when the central bank is reducing its balance sheet, it tends not to be good news for stock market and also for the Chinese currency.
So if a triple R cut is too little too late, perhaps, what is really going to lead to a sustainable reversal in stocks then? I mean, we've already heard from the PBOC. It seems like they're taking a bit of a whatever it takes approach.
Yes and no. I think a few days ago, when the market was plunging substantially, the PBOC's governor, Yi Gang, came out and said, people should pay less attention to market gyration in the near term because it is probably more sentiment related, which to, the point, I agree wholeheartely. So I would say that, even though the situation is not looking promising for the market because of the trade war, but, monetary policy should be directed more towards how the economic fundamental is performing. So in the first quarter of this year and also in April, economic numbers is actually looking better than expected. So it gives less excuse for the central bank to ease monetary policy aggressively unless things actually turn substantially worse from here.